So the Bank of Canada left rates unchanged. James, did anything in the language stand out for you?
Sure. Well, precious little change in terms of the tone of the statement, really recognizing the risks on the global front, the China-U.S. trade escalation, and what we've seen in terms of global economic growth deteriorating. But then it switched to sort of the resiliency in the Canadian economic data, pointed to the Q2 GDP report, which came in better than expected after some weakness earlier in the year, recognized the improvement in housing, and then sort of said, given those two things, the balance is pretty good, and the rate, the policy rate is right where we think it should be. So not a lot in terms of forward guidance, obviously reflecting what we've already seen in terms of financial developments, but not giving us a lot in terms of where things are going.
Any changes to your 2019 rate forecast?
Well, certainly before this statement came out, reflecting the deterioration in economic activity we've seen, we do think the Bank of Canada will have to cut rates, probably by 50 basis points. We think they'll cut next in October. That's a good meeting because they also have their monetary policy report at the same time. They update their economic projections. And then we think they'll probably cut again in December. The December cut, I think, is contingent really on what we're seeing globally and on the trade risks, and an assumption that that won't improve by then. Obviously, that's a harder call to make, and if we see some resolution, maybe they won't have to make that second cut, but certainly looking at the world as it is, probably at least 50 basis points in cuts.
What are some of the other risks to the bank going forward?
Well, they really are focusing on those external risks, the trade war, the fallout from that, the slowdown in global economic activity. We have seen obviously good evidence that manufacturing globally is in recession. Most recently, the US ISM indicator also in contractionary territory. So they're looking for signs that that is feeding through onto the Canadian outlook, and they really want to see the proof in the pudding in the data, and we haven't yet seen too much of that. But obviously that and also what's happening in terms of household debt, which is always there in the background. There, I think they've seen some alleviation of those risks. So again, just refocusing on the external.
Do you see potential risks of a recession next year?
Well, certainly that is the million-dollar question, isn't it? And we've obviously followed quite closely what's happening in financial markets as well as the economic data. The financial data, in particular, what's happened in the bond market, in the inversion in the yield curve, that has been in the past a pretty good recession indicator, and that's a clear cautionary sign. The economic data is certainly not flashing red yet. We see a lot of indicators in the yellow territory, so caution is warranted. But historically, that has been consistent with something like 1%, 1 to 2% growth rather than an outright contraction or recession. So it is a really difficult thing to answer affirmatively, but I do think that the risks have certainly risen, and we really do, as the Bank of Canada does, need to watch the political environment. Do we see some resolution on the trade front, or do we see continued escalation? I think that's going to be the straw that breaks the camel's back.
Where do you see the Canadian dollar going?
Sure. Well, obviously the Canadian dollar is buffeted by these global risks and what the Bank of Canada chooses to do. I think with the Bank of Canada eventually following through with rate cuts, it should keep the Canadian dollar pretty stable. We do think that we will see some improvement eventually in the economic outlook. That could put a little bit of a boost to the Canadian dollar, but really I don't think we see anything higher than 76, 77 cents by the end of next year. So pretty steady as she goes.
James, thank you very much for your time.
You're welcome.